Welcome to Trading Nation, folks. I'm Eric Chemi. Today we're joined by legendary bank analyst Dick Bove. He's here to talk to us about the upcoming bank earnings this week. Now, Dick, I want to get right into it. Are these bank stocks moving higher because of momentum or because of fundamentals?
Oh, I think it's very definitely momentum because the fundamentals are not that strong. In other words, if you go through the different products that the banks sell, just about every one of them are flat to lower in growth than they've been for at least a couple of years. So it's not fundamentals which are driving these stocks at the moment.
So do you think it's just a matter of when these things come crashing down, if it's going to be momentum, but it doesn't have the fundamentals to back it up?
Well, if we don't get some event in the economy or in politics or somewhere that is going to create more loan volume and better margins for the banks, then yes, they will come crashing down. And I think that the risk in these stocks is very high at the present time, but I think you just have to go with the flow at the moment.
Okay, so let's focus more specifically on earnings this week. Is there a company or two that sticks out to you in terms of this is a company that I think is going to overperform or underperform, just something on the extremes?
Well, I don't think that any of the biggest banks are going to overperform. I think there are companies like PNC Financial that should have, relatively strong earnings. In fact, very strong earnings. I think First Republic, which is another regional bank, should do really well. But if you're looking at the stocks that people usually look at, Bank of America, Citigroup, Wells Fargo, JP Morgan, I don't think any of those companies are going to surprise you with very strong earnings right here.
You've got a sell rating on Wells Fargo. Do you think they've got any chance to do something to change your mind and maybe get them back to a neutral or a buy?
Well, I mean, what generally I look at is what are you selling? In other words, even though it's a bank and people don't like to think about do they sell their products or not, I think it is still the key to the company. And at the moment, this company has now gone something like 7 years without showing any improvement in their operating profit. In other words, they've reduced their loan loss reserves by $20 billion, and that's caused their reported earnings to be up. But if you look at their operating earnings, they're down. They're down from where they were 7 years ago. And the reason is because they're just not selling things at higher margins. And that's what they have to do to get the stock, in my view, to turn around.
What about your thoughts on Goldman Sachs? I don't get the sense you love them either.
No, unfortunately, I think that they missed the boat totally in terms of the changes that have occurred in the, if you will, trading area. In other words, we've seen this massive shift in which money is pouring out of actively managed funds. In the last 12 months, something like $300 billion has been pulled out of actively managed funds, and that money has gone into, passive funds and into ETFs. In fact, $400 billion went into passive funds and ETFs. Now, if Goldman had set its business to benefit from where the money was going, I don't think it would be in as much trouble earnings-wise as it is right now, but it didn't do that. It waited for the old-time religion, the actively managed funds to come back, and they haven't come back. So Goldman has not repositioned itself the way it should have, and it is the worst performing of the 6 big banks in the United States. It is earning less money now than it did 10 years ago. I just don't understand the mystique of Goldman. I wouldn't own it.
So then let's just talk briefly about this OneMain Financial sell. I mean, I get the sense that maybe it's not a good thing. Usually you think about M&A as a good thing for the market. This one may not be good because they might not have performing loans right now. Does that suggest to you that subprime, as it might affect some of the bigger banks, could also be a negative sign for them too?
Yeah, absolutely true. I mean, you're right on target, right? In other words, OneMain is selling, in my view, because there's been an erosion in the loan quality in the subprime markets. And even though the big banks claim that they don't do subprime anymore, they do. And the way they do it is they've backed into it by providing funding for companies like the Lending Club or On Deck Capital. And as a result of that, they're one step away from direct impact in the subprime market, but they're back in there. And I think that you'll see in certain consumer areas, such as credit cards and auto loans, you will see, an erosion in loan quality. And I think ultimately you're going to see an erosion in loan quality in commercial real estate also. So I think the outlook, again, from a fundamental standpoint is not exciting, not positive, but the market doesn't care.
All right, so let's say if I wanted to invest in bank stocks right now, what do you like the most? Where should I be putting my money in right now?
Well, I think, the best way to invest in bank stocks right now is to buy the companies that are below the curve. In other words, if we're saying that the industry overall is not going to do particularly well over the next couple of quarters, then what you want is a bank which is below what the industry is doing that's going to catch up. Bank of America certainly is in that category. It's a company which has had terrible problems over the last decade, and I think those problems are behind it. It is now getting ready to get its revenues back up to the curve. In fact, it might even now be outperforming on the lending side. Citigroup is another bank which is in that situation where basically, the company was literally dead twice in since 1980, we'll say. And basically, the company has restructured itself completely, is now selling a smaller number of products where they can have a dominant position, and I think that Citigroup is going to catch up to the curve also. So I'd say both Bank of America and Citigroup would be two stocks that I'd be willing to buy here.
All right, so there we go. Bank of America, Citigroup, maybe ignore everyone else for right now. Dick Bove, thanks for coming on here and joining us here on Trading Nation.
Thank you very much.
All right, so that was Dick Bove, the legendary bank analyst. I'm Eric Chemi. Thanks for watching. We'll see you next time.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.